in real life. Oh, hold on. Let me change the background for this. There we go.
All right, that's better.
Haven't done a YouTube video in a long time, man. I gotta get used to it again.
Yeah. What is this thing again? Like, is it live? Oh wait, no.
Yeah, exactly. Is anybody watching this and testing?
Good to see you guys. Yeah, we're here tonight. Bootleg got moved a little bit just because of some schedule stuff. SoFi Weekly, if you're tuning in for that, that'll be tomorrow with Tevis and Tanner. I'm not able to make that one. Apparently, I've turned against SoFi because I didn't include it in a screenshot or something. So I'm out. No, not really. But yeah, Tanner was not the reason why we were late for once. So, yeah, we're going to discuss a lot of macro, a lot of the tariff stuff, and some individual names that we found interesting over the week. And of course, as always, as we get towards the end of it, we'll be glad to take your guys' questions, do the rapid fire market madness part. Unlike when we usually do this on Mondays, we don't have an end time. So Tevis, yep, for a 4-hour stream tonight?
Yeah, I'm fine. It's Saturday tomorrow. I don't have anything until like noon, so I'm good.
All right. Well, why don't you grab yourself a Celsius, not a sponsor,
What did you
we'll crack it open at the same time. So I'm kind of curious from you guys in the comments, like, how did it go this week? You guys hanging in there? You guys adding more, buying more, out of cash, selling, holding, waiting? It's tough to predict. I saw, I think futures were pricing in like a 2.5% move on the NASDAQ and the S&P 500, something around that on Monday. And I'm like, oh, not too bad of a move, which is crazy because 2 weeks ago we would not be saying that. So you're being healthier instead of the...
No, I grabbed the Celsius too. Don't worry. I grabbed the same one as you did. Bro, what is Celsius even trading at right now?
I was actually curious about that. I ended up buying these for probably cheaper than the stock.
We can play a game where you can ask me what the prices of stocks are, and I'll be so freaking far off because I haven't looked at the market at all.
Okay, let's start there. Then we're going to do the tariffs and macro stuff. So Celsius, where is it trading?
23.
I'm going to show you this because you're not going to believe me if I...
Higher or lower?
Higher.
37.
I don't know. I've not been paying attention to that one. That's on a watch list I don't look at too often.
What?
Okay. What's another one that you haven't looked at in a while?
I don't know, man. I know Tesla was like 253. I know SoFi. Gosh, what even is SoFi? 11-ish? 1030?
Oh, yeah. I mean, 1071. So, yeah.
I saw Robinhood was 43. Other than that, I don't know any numbers of any stocks.
Yeah. Well, so this is one of those times when just because the macro is what it is, it's not everything is going to move in unison. Like Palantir's been a little bit stronger than I would have expected actually in this. PayPal has actually been weaker. But for the most part, like it's just live and die based on a tweet. That's where we're at right now.
The whole market right now.
And as a result, we got earlier this week when it was announced that there was a 90-day pause. And so things are being held where they are at 10% or lower. With the exception of China, the market roared, and it was the second highest single-day performance in history ever. And I had to look. This week I've been very busy. And, I was expecting that we'd have at least a dead cat bounce. I wasn't expecting that kind of volatility. And I looked at my phone and I was like, wait, what? So I logged in and I'm like, okay, there's obviously, and I knew it had to be a pause. That was the only thing that would have done it. So, and what was interesting is that you've probably seen some of these, but we're going to look at that day because there's some sketchy stuff that happened. So first, I think we'll start here. This was Fox. Let me share the whole screen. Make sure I'm sharing share a tab instead. We'll do that. Okay, perfect. All right. So this came out, I believe it was yesterday. And a lot of people were thinking that Trump's hand might have been force or maybe not force because of the 10-year yield. We'll look at that in just a second. But the thought was for a lot of people is like China that owns a lot of bonds, the U.S. government was dumping them as a retaliatory measure. Well, maybe it wasn't China. So let's take a look at this.
And why? And I don't want to say this.
You got to put it up volume.
I am a patriot. I'm an American, but it is the White House who capitulated. Well, I mean, because of the mixed messaging, how can you doubt them? I mean, let's be clear what happened. Who capitulated here and why? And I don't want to say this because I'm a patriot. I'm an American. But it is the White House who capitulated based on everything I hear and all my sources. And the reason why is because of the bond market and what happened last night. Bessent knows this better than anybody. When you have yields on the 10-year rising to 5%, stuff starts shutting down. When you have the lending markets screwed up. By the way, who was dumping the bonds? Somebody asked them if it was China, right? Mm-hmm. It wasn't. It was Japan. While he was negotiating with Japan, according to my sources, who are running major money management firms that are involved in the bond market without giving up names, Japan was dumping bonds because they believed this was not a great place to do business. That forced their hands. Now, what you can say, I think, legitimately here, is Trump decided to take the win. And here's why. There was overwhelmingly, deal potential here among the entire world, except for maybe China, right? Everybody really wanted something. So he did take the win, but make no mistake about it. Peter Navarro was talking as of yesterday about not taking the win, and now they did. And it's all because of the bond market. I want to point out.
So that I thought was very interesting. It didn't seem like that guy was just speculating, like he had some knowledge on what was actually happening behind the scenes. Maybe it's legit, maybe it's not. One thing that is sure, let's take a look at that 10-year. A lot of people are saying, yeah, watch the 10-year. It's actually really important here. Mm-hmm. I think that at least some of the reason for that 90-day pause, even more than the market falling apart, was this. So if we look at, for instance, year to date, we saw, not long ago on the 4th, this had fallen basically to 4%. At the beginning of the year, it did spike to almost 5%. But this was dramatic, especially intraday moves. The bond market rarely moves like this. And of course, it has continued to move. Now, this doesn't mean it's any one particular person. There's a lot of factors in the bond market too. But this is the opposite of what we want to happen. It's bad because mortgage rates are inferred by that. But bigger and looming threat is for the United States government. There's a massive amount of debt that they need to refinance. The higher this is, the more they'll actually have to sell to be able to refinance it, or the more painful it will be over down the road. And the other factor, too, is there's a lot of companies that have not refinanced debt, which is locked in at low COVID levels, but they're entering that window where they really need to refinance it. Last year, we saw a lot of senior convertible notes, so people were using their equity to be able to refinance. That's one way. We saw SoFi do that as well. And then I saw PayPal a couple of weeks ago, 3 weeks ago maybe, refinance some of their debt, locking it in now because they're like, hey, might as well. It's in this comfortable range for them at least. So any thoughts on has this surprised you at all, Tevis?
Well, that happened when China retaliated. That's when that happened, right? Because the initial drop was it fell under 4% when he basically tariffed every single country, and he came out with that list. And then when China retaliated, essentially was when that shot back up.
So at least according to the Fox News commentator there, it was Japan that was actually selling the treasury bonds, putting a lot of upward pressure on that. Now, since a pause has been reached, I don't think that this is Japan now. That would not make too much sense. It could be, but China could be following up on that and say, okay, this is actually pretty effective. Maybe we can get this thing above 5, which is painful for the United States.
Do you think Japan alone could be making that type of move? I seriously doubt that. Really?
They own a lot of U.S. bonds, a lot. It's a massive amount. I think China is the number one holder, if I'm not mistaken, but Japan was actually number 2 as far as like international. I'd have to look at that again. It could be. I mean, there's a lot of factors. B-Dubs is right. Like, it's not just Like only Japan is selling. There's a lot of unwind. And there's probably some other players that are like, you know what, United States is just kind of a mess right now. Maybe we want to unwind these things too.
So maybe just explain for the 100+ people here why this is relevant. Like, I understand the logic to say, okay, well, if that yield goes up, then it means that bonds are essentially less attractive, and as a result, the yield for that bond is going up versus the other way around.
Yeah, so there's a few factors. So one is simply if it didn't mean anything else, if it's just a fake number, which it's not, that shows like free income. And so somebody like might be looking at the market right now and saying, okay, right now I would prefer to, instead of being in equities, which nobody knows where we're going, and there's a lot of uncertainty in the market, cash can flow in the sidelines. People might be looking at this and saying, you know what, 4.5% is free money. It's easy money. Why don't I just do that for 10 years, or you can do 2 year or 3, like whatever. There's a lot of different durations for the year. So as bonds tend to rise, you see usually a inverse correlation with equities. Now, beyond that, there's meaningful ramifications because this is this infirms like the strongest correlation for mortgage for 30-year mortgage in the United States is the 10-year Treasury note. And so a lot of people are locked into those low COVID levels. This last year is one of the worst years in real estate over like since I've been an adult. Outside of the great financial crisis, that was absolutely terrible. But a lot of the real estate market is frozen, and that's a significant part of the U.S. economy. People are locked into those low rates; they don't want to really move. And there's yet people that want to buy houses that they can't really afford to do so because they paying like 7 or 8% interest is not good. And there's people like myself that moved because we had to for a job, that left very low interest rates, moved in. We're okay where we're at, but we were really expecting within 2 years we'd be able to refinance at a lower rate. It's been the opposite. It's actually higher than the 5.5% that we locked in. So that feels like a good rate right now. So there's a lot of pain on that front. And then, of course, the United States government itself, like this is how they finance a lot of their debt, is by selling bonds. And so, of course, there's multifacets as far as what they're doing to try to reduce this. But in an ideal situation, like that was kind of the silver lining situation, right? From a lot of this tariff uncertainty and shakeup, was at least we had a falling 10-year yield, which is good because the United States government can refinance its debt at a cheaper level than it was before, or at least not as high as it has been over the last couple of years. People would look at it and just be like, well, I don't know if I want to be in bonds necessarily. So there's more than that, but that's like the high level enough before I put people asleep.
Well, I mean, I think it's interesting, right? Because there's multiple layers to what's going on that are sort of unfolding. There's like the geopolitical game theory of it all, of what the US is doing to the world and who is coming to the table to retaliate versus to cooperate. And then there's the whole lowering the yield to refinance a debt argument. And I found Bessent's commentary really interesting. Maybe I can throw that up around him saying like, hey, here. Maybe I can throw this up. Present. How do I do this again? Here we go.
And all this was, again, this was driven by the president's strategy. He and I had a long talk on Sunday, and this was his strategy all along. And that, you might even say that he goaded China into a bad position. They responded. They have shown themselves to the world to be the bad actors. And we are willing to cooperate with our allies and with our trading partners who did not retaliate. It wasn't a hard message. Don't retaliate. Things will turn out well.
Yeah. So, okay, maybe there's a couple things here that I want to chat about, because like I responded to this post and I was like, there seems, at least for me, there was like a read between the lines type of moment between that last, like, don't retaliate, things will turn out well, wink, wink, nudge, nudge around. I posted saying we just want to maneuver to fix our debt repayments, and once we do, things are going to go back to normal in a few weeks and months. And we never intended to go through with any of this, but we can't just come out and say that. Like, that's what I sort of read between the lines, but obviously I think it's a little bit different for everybody. It does also seem like a two birds, one stone type of thing. We're like, hey, we'll put tariffs on everybody, and then now they're pausing tariffs on everybody, and China's left, holding that bag from a tariff perspective because they're the odd one out. And over the course of the 90 days, you're going to see more and more and more of these deals closing, and so it's going to spur a lot of other countries that to solidify agreements with the U.S., which even leaves China holding the bag for longer. But then again, China is a very big country, very big economy. I don't think, I don't know. So multiple layers is all I'm trying to say.
Yeah, and this strategy makes a lot more sense trying to isolate one instead of like going against the entire world. It's like the United States is in a strong position, but it's like one really strong dude doing tug of war versus 100 that are not very strong. It's the 100 are probably going to crush them. So, Besant, he also mentioned today that they were keeping an eye on the Treasury market specifically. So this is definitely something that Trump has talked about a lot and often, Besant as well. And he said, we have more than 15 trade offers on the table. So this was something that Bill Ackman had put out there. I'm going to zoom in just a little bit so I'm not kind of giving away what I think about it. I'm curious what you do, though. So this is, I'll just read it. He says, a thought experiment. Yeah. Imagine if within the next 89 days, the U.S., Europe, and Japan agree to go 0-0 on tariffs and remove all trade barriers. Then Europe and Japan join in the U.S., raising rates on China to 145%. Then the U.S., Europe, and Japan, as a united front, negotiate with China to remove tariffs and trade barriers and put in place strong structural protections for IP. What do you think?
I think it's feasible. I found it interesting coming from Ackman. I think Ackman has been somewhat of the canary in this coal mine, simply because somebody posted this the other day. This man has now become a bottom indicator. I remember when he went on CNBC during the COVID rant, and he was just like, I can't remember what the topic was, but he went on CNBC and had like a very emotional response, and then made a ton of money. I think it was like shorting the market or something. And he's done it a couple times since, with the latest tantrum being a couple of days before this. And now I find it kind of rich that he's coming on, saying stuff like this.
Yeah.
Because it's like the market bounced back. And he's like, well, actually, now
I like Ackman. I still, the COVID thing was, it was a doom and gloom, the world is ending type of thing if the Fed doesn't intervene. And he had positioned himself very well for that interview. Yeah, that's all I'll say with that. I had his firm actually contacted me and was like, hey, to set the record straight, and it was this long thing. So I'm just going to leave it at that. You guys can look back on YouTube. There's still like, look for Bill Ackman COVID, and I think it was CNBC. And you can see it live yourself. So Pershing Square is the firm that he's with too. So, regardless, this would be amazing if this works out. The lower trade barriers. I'm a fan of globalism. Like, it's not perfect like capitalism. There are issues, but overall, it's a really good system for most people. Not everybody, but almost everybody. And in mass, like, it benefits the United States, it benefits society, it benefits as a whole. Now, there's a lot of dangers with this. If China feels very isolated, then they might just say, okay, we will invade Taiwan then. You guys are going to do this to us. How about a hot war? You want that? Nobody wants that. And then realistically, like, how realistic is this to happen? I think it's like, I don't know, like a 1 in 10,000 chance. But if it happens that way, great. Credit to who it's due. I think it's just very optimistic.
I'm much more optimistic in the Japan thing. I think Europe is definitely not having anything to do with the U.S. I saw this post earlier today that Maloney was flying to the U.S. to negotiate with Trump on tariffs, basically going against like the EU agenda. Because I know the EU has a hard stance for other reasons. So I'm not holding my breath at all that the EU is going to make a deal with the US. I think I'm almost more confident that China will make a deal with the US before the EU does, simply because there's some ideological gaps between those two countries or those two regions right now, and I think China's just like we don't care. We just are here to make the best economic decisions for our people. But yeah, we'll see what happens, right? Because I already saw a bunch of countries making concessions and approaching the negotiating table. I also don't understand the whole I saw this Dave Chappelle skit around we're bringing back jobs to the U.S. He's like, I want to wear Nikes. I don't want to fucking make them. I kind of agree with that stance as well, right?
So let's go there, and then we'll go back to some insider trading stuff that we have to talk about.
Oh yeah, I missed that, dude. I missed that tweet, and that was such a layup. But I was just in meetings all day, and I caught it way too late.
The president's tweet, or
yeah,
we'll talk about that too. But since you mentioned making things, one of the stated goals. Now, there are at least 5 stated goals for the reasons of the tariffs by the president and his team. But one of them supposedly is to reindustrialize the United States, bring back manufacturing here, which I think with robotics, automation, that sort of thing, it was going to be coming back anyway. Some of it, not everything. If you can throw this up, Tevis.
Yeah, sorry.
Okay. All right. So this shocked me. Today, the White House said President Trump believes Apple can produce iPhones entirely in the U.S. Yeah, of course they can. How much would it cost? According to Forbes, it would cost $30,000 to $100,000 to solely manufacture an iPhone, one, in the United States. No, this is not a typo. It says there's a long Forbes article that goes along with that. What do you think, Tevis?
Yeah, I mean, intuitively, we all know this to be the case. Frick, man, there was this video. I should really be more careful about saving videos to bring them up here. But there was this video of this guy saying, look, I don't understand the whole U.S. stance around we've been abused for a long time. You're the biggest economy in the world. You're the biggest trading partner in the world. And you massively profit from globalization. Yes, somebody in a sweatshop in Vietnam makes $1 off a pair of, or a t-shirt, but then you sell that t-shirt for $20. Why are you looking to squeeze that $1 that they're making when you're making an insane many multiples profit margin off of these developing nations? And I kind of agree with that take, right? Because I understand the whole hey, we got to make jobs in America, but it's okay, well, you guys have a minimum wage in America.
Yeah. We want good jobs, not just I would like to be a lettuce picker. It's kudos to those that are picking lettuce, but I don't want that job.
Right. Yeah, I'm hiring. I was hiring for some junior level roles, and I haven't done that in a couple of years. And I had a call with my head of people today or yesterday. I don't know. The days blend together. And I was like, okay, what are we going to pay this person? And she was like, well, we can't pay them under $17.50 an hour. And I was like, okay, they're entry level. And she's like, well, $17.50 is minimum wage. I was like, what? Yeah. Every single year, that minimum wage amount goes up. And I know in the States it's a little bit different because every state has different minimum wages. Here in Canada, it's $17.50 an hour. And I'm like, how the fuck? How do you want to bring back these random, assembly line type of jobs at that kind of price range. Like, yeah, of course an iPhone's going to be $30,000. I'm absolutely not surprised that an iPhone's going to be $30,000 because like you're a developed nation, man. Like, what do you expect to happen? So yeah, I just don't get it.
Yeah. Well, so as far as the number, I think that this is completely wrong. Like you ignore just a whole lot of stuff. Yes, it's going to be more expensive. An iPhone costs what, like $1,000, a little bit less. I don't buy Apple. I know it's a little bit more than
Yeah,
the
about
other big
max
stores.
$1,000 ish.
Yeah, so it's like, could it cost 2,000 making the United States? Yeah, 3,000, maybe. 30,000, like there's no way. Like it ignores what manufacturing at scale actually looks like, optimizing the supply chain. In rights law, when you every doubling of production tends to, depending on the product, shave off about 20% from the manufacturing price. So this, I mean, nothing else, this actually shows how far down like Forbes has kind of slidden. Still some good stuff and good content on there, but that was just utterly preposterous, especially when they had to say, no, this is not a typo. It's like, they do have some caveats in the article too, if I recall correctly. But yeah, if we do bring that back, even if it's like $3,000 for an iPhone, that's not great.
Yeah.
Maybe it's a decent job for some and everything, but oh man, Lutnick had said in kind of in response to this Forbes article as well that we have a bunch of people in the United States that are happy to screw in tiny little screws. Like, yeah, we'd love to have that job. It's like, we would not.
So should we play this little Chappelle clip?
I mean, there's a lot of language, right?
There's some language.
Let's not. So
Let's
just
not.
keep it family friendly. As much as we can, but it's a good one. You guys can look it up on your own. So
look, so I wanna also throw this up because I do think that there is going to be a time and a place where robots can just do this for near free. In which case, yeah, absolutely bring all those jobs back. Guess what? We're not there yet. There's a gap, and we're absolutely not there yet. I think that if you have a fleet of robots who do this 24 hours a day, 7 days a week, 30 days a month, nonstop, then okay, I kind of get it. Electricity cost is going to go into effect, like the location, the permitting, all this other stuff. But sure, you can get a manufacturing fleet for near zero. I get it. There might be some margin there. You're not there yet. You're years away from that to be a reality.
All right, let's look at two aspects of insider trading. But I agree with you, like robotics, like that's inevitable. It's coming. Tesla is likely to be one of several winners in that.
What did you, just before we go on to that, Roy, what did you, there is so much for us to catch up on. I feel like I've been out of the game for so long. What did you think of this whole rare earth thing? Because China was saying like, hey, we're not going to do rare earths anymore. Sorry.
So going back to the Zelensky discussion at the White House, which I won't comment on that. It was, other than it just kind of being a debacle. A lot of the goal there for the Trump administration in the United States as well was to secure rights to the rare earth deposits in Ukraine, which there's a good number of those. And they wanted to make sure that they would have access to that, not free or anything. But I think that is a concern. It has been in the past for nations as well. Even like guano was one of those things, which was, rare earths 200 or 150 years ago. I think that's about right. And nations have gone to war over, less. And so I think that it does put some pressure on the United States, but there's enough. I think that we have enough access, especially if Ukraine ends up signing off on that, that it's not going to be that much of a price. Like there'll be some pain. It will cost a little bit more perhaps, but yeah, bottom line is, I don't think it's the biggest deal.
Yeah. I mean, like I found it interesting because not necessarily for the rare earths point in isolation, but more so thinking about what are these other levers that these countries can pull to escalate? I remember a couple of weeks ago when we were on the bootleg, I talked about like software being the next sort of domino to fall around these tariffs have been, and I think it's a valid point, right? Because the tariffs have been over indexed on manufactured goods versus software. I mean, the US is like a surplus exporter of software and services to the world, and nobody's talking about that, and so I just think it's kind of one-sided, and that there are many levers that these countries can pull if escalation was actually the goal.
Yeah, absolutely. So as far as insider trading, there's two things going on. So one is, well, did you want to talk more about the rare earth and everything?
Well, there's one last thing I want to talk about that I just remember. I'm going through our posts in our chat history. Did you hear about this story where Apple flew in 5 plane loads of iPhones?
Yeah.
Dude, what was that all about? It's like, I found it really funny, like the memes that came out of it, because they were like, this is the biggest company in the world with the, what were they saying? They were like, with the tax avoidance strategy of a crack dealer or something like
that. So on Apple, I think it was 3, maybe 4 weeks ago. I was looking at the valuation of Apple. I'm like, this is stupid. I don't short companies, but if I did, I would short Apple. And one of the things that I cited, but there's several things going on, is I was like, the market is acting like Apple is a flight to safety, but it's not, especially in this environment with tariffs. They are very poorly positioned. They're not just in China, but that's, where they are significantly, and then they're going to be hurt by tariffs. I did not expect Apple to fall like it did. I really wish it did. I think, honestly, like they have fallen so far from where they were before in terms of innovation. But I think also as far as supply chain logistics, that sort of thing, they used to be pretty agile with this. That's why they ended up in China in the first place. And now they're an old company, and people don't understand, like, they have a lot of good things going for them just because, Steve Jobs had positioned them so well that the company could run almost on autopilot for like a couple of decades and be fine. But they're an old, brittle, fragile company with osteoporosis and arthritis and all kinds of different issues. It's not going to be pretty in this kind of environment that's chaotic for Apple. They're not going to be as nimble as a lot of other companies. Yes, their competition will also be hurt too, but they are not well positioned. I'm not predicting Apple to go to zero or Apple to fall out of like the top 10 as far as market cap, but they're going to underperform, I think, for a long time, especially because they don't have innovation anymore. And they don't, like, they respond to things like this. It's an anecdotal little thing, doesn't really matter, but like, you respond to this by doing a flight of a whole bunch of iPhones to India to avoid. It's like,
I mean, look, man, this
oh my goodness
is the most innovative thing they've done in the past couple of years. If, like, I just asked ChatGPT right now, about 350,000 iPhones per plane, assuming $1,000 a unit, it's 1.75 billion for 5 planes.
Yeah.
All right. Of street value. That's how much product they're moving into the country to avoid taxes on, or avoid tariffs on, I should say. So if you're thinking about innovation, I would argue that that's pretty freaking innovative considering the company.
Vision Pro, I'll give him, was pretty innovative. Had some issues. Jobs would not have released the product like that at all. But I don't know. Like, I don't think it's going to be as good as Apple had hoped, but it was worth a try. So, but man, it's one of those things where I'm like, yay, I was right about Apple, kind of, but it's also, I wasn't expecting. A lot of it was just like the aggressive nature of these tariffs, the negotiations, the tweets, everything was going down. Apple went down like a lot more than I would have expected in that environment. But
yeah, no, I think we agree on that. I mean, jokes aside, like, I think we can both agree that Apple is on the last stages of that business life cycle diagram. Let's put it that way.
Yeah. Yeah, and they'll be a big player still for for years, like services. Paul mentioned, it's like, yeah, the service industry is killing it. They're going to do fine there. They'll be able to coast for a long time. But
long time.
I mean, 10 years out, are they going to be in the top 10 as far as market caps companies? I don't think so. I don't think so at all.
Yeah, I would agree with that. Not in the top 10, but like their walled garden on their iOS, on their app store, is way stickier than any of their product, like their hardware sales could ever be.
Oh, yeah.
So that's the thing that will keep them, beating for much longer than you would think.
Yep. All right. Let's do it. Okay. And I'm okay with that, by the way. So
sure.
So two things happened. One, I guess we don't need to show that tweet, but in essence, Trump said it's a good time to buy on publicly national media.
You want me to throw it
up? This one, yes.
Your screen, right? Yeah, okay.
Yes.
All right, and we're gonna also send the link to Eli, and he's gonna jump on.
So in essence, there has been accusations of insider trading on two fronts. One is that Trump was doing insider trading by saying it's a good time to buy. Now, I think Lutnick, and we talked about Lutnick in the past, as far as like Tesla stock and stuff like that, absolutely was crossing the line, shouldn't be done, probably illegal. Donald Trump telling the entire country publicly it's a good time to buy. Is that insider trading? And if so, should we even really care?
Okay. So, yeah, look, I think the easy answer is yes. Here, let me take down your screen because.
Yeah, well, I wanted to show like the 5-day chart too. So go ahead, you can throw it. There we go. Perfect.
I would say like the easy answer is yes. If I had to steel man the other case, I would say like, well, and I wish we had Tim here watching because I want a lawyer's view on this, but like he didn't say buy the stock market. I mean, he could have said like start a business in America. There's multiple ways that tweet could have been taken. Obviously, the vast majority of people took it to mean buy the market, but it wasn't explicitly clear. So there is potential plausible deniability there, let's say. And then the other thing is like. I understand the stance of saying, is it really insider trading when literally everybody benefited from it? I get that stance too. I mean, I'm sure it's a little bit different from all the politicians doing insider trading since they're the only ones benefiting. Like to the point where now when the Nancy Pelosi tracker comes out, even though it's like delayed by a month, whatever stock she bought jumps by like 30% plus just because she bought it. Same as Buffett or any of these other, famous investors. So I think the cat's out of the bag with regards to insider trading. If you're going to have insider trading, this is probably the most direct way of having it for the people to benefit in real time.
Yeah, so it's technically not insider trading at all. It doesn't meet the legal definition as far as my understanding. And I don't think as many people as you expect bought it at that time. Now, we will talk in just a second about where I do see what looks like very real, very clear insider trading and some responses on that. But let me ask you this to both you guys. And Elijah, thank you for coming on with us. The next time that Donald Trump tweets out or says, hey, it's a good time to buy the dip, are you going to load up?
Thank you guys for having me on. I really appreciate it. Yeah, absolutely. I mean, it was unreal. You had 3 or 4 hours, and then boom, we had like a 10% day for the S&P 500.
Yeah.
Oh my gosh. Insane.
Yeah. I mean, like at that point, I think I'd take the risk. I just, I'm like 10% cash. It's like, all right, all my chips on the table. Yeah.
But you made a good point. Like, is it really insider trading? I mean, then you had him on the news with Charles Schwab saying he made over $2 billion today. So not the best look, to be honest. But then you have Nancy Pelosi and the whole rabbit hole there.
I saw that, and somebody had commented with like the clip from The Big Short where he's like, why are they confessing? And he's like, they're not confessing, they're bragging.
I mean, yeah. Okay, so here's where like it seems like there's real insider trading to happen. So if you throw this up, Tevis, I'd appreciate that. So this is noting that NASDAQ call volume spiked minutes before the 90-day tariff pause was announced. And you can see that here, this green bar, a massive spike. That and it really rose up a lot as a result. But even before, like it was just unusual. And on the S&P 500, you actually had something that was very similar. Spike all spiked by a factor of 10 just 10 minutes before Trump announced he was pausing the tariffs. Now, just to catch everybody up, this was not Donald Trump like tweeting and saying it's a good time to buy, and then 10 minutes later, no. That happened hours before. And we didn't see this kind of, the market was, I think, closed initially when he maybe have done that. But we didn't see earlier in the day that kind of spike, that kind of volume at all. It was only in the minutes right before the actual announcement. And as a result, AOC had noted, and she said, any member of Congress who purchased stocks in the last 48 hours should probably disclose that now. I've been hearing some interesting chatter on the floor. Disclosure deadline is May 15th. We're about to learn a few things. It's time to ban insider trading in Congress. Thoughts?
Good luck with that, AOC. Dude, just logically speaking, through first principles, the people who are in power are the only people who can change the rules, and they're not going to change the rules that benefit them because they're the ones who essentially are like what's the expression? They're the judge, the jury, and the executioner all at once. It's like, well, if you were in Congress and you made the rules, why would you put rules and restrictions on yourself if you're benefiting from those? Like, just from a human greed perspective, like on its most base fundamental layer. So that's why my trust or my confidence level that you're ever going to have this as a ban is like near zero.
Yeah, I don't think there should be a ban on individual stocks. I really don't think that's fair. More transparency is always welcome. But what I really want to know is, did Warren Buffett buy? Has he bought anything during this dip?
I doubt that he altered his strategy. I could be wrong. We'll find out, of course, when that's disclosed. But if he was already buying something, he probably just kept buying it. He has a lot of cash on the sidelines, and we're not really like outside of the uncertainty area. So,
and didn't he just offer some debt with like the Chinese yen or something like that, Tevis?
The Japanese bond market, I think.
Japanese, yeah, there you go.
I think I saw this somewhere.
Some news today.
So as far as before we like pivot and talk about Buffett, like this was, it seems very, very, very suspicious. The insider trading happened. Very likely it's going to be a Republican or several Republicans associated with the Trump administration, and they should absolutely be prosecuted. This is ridiculous. This kind of Donald Trump saying it's a good time to buy, that's one thing. That's fine. It's not technically insider trading at all. This is ridiculous. I also think I'm not a fan of AOC at all, but this is one of those things she's been pounding the table on, and people are like, oh, what about Nancy Pelosi? It's both parties. Republicans and Democrats have been doing it for a long time. I would like us to move to a place where they can't own options, nor can their family members perhaps. They can't own individual stocks, but they can own ETFs. That way, they still have exposure to the United States stock market. They still benefit from it. I guess technically they could still like buy a whole bunch of shares in the SPY or something like that leading up to this, although that does need to be investigated each time by the SEC. But this is just ridiculous, and it's not right. And I think that there's enough Republicans out there too that like Democrats, if they are Republicans, Democrats are going to go very hard after this. And I think there's enough Republicans too where, maybe there is some actual legal change that's done and passed through Congress.
Yeah, I agree. I think it's a pretty bipartisan thing that people take advantage of insider trading behind closed doors. And it's something that I mean, it's so surprising to me, man, because it's so out in the open that people openly joke about it and make memes about it to this point. Like, it's not even like they don't even try to hide it. You know what I'm saying? Like, it's I would understand for a politician who's 80 to be like, oh, well, it's just good luck or whatever to have some plausible deniability if he bought a week before and he bought shares of Nvidia, but they're buying like calls the day before. And I'm like, come on, guys, at least be a little bit more subtle about it. Jeez. And so there's absolutely no fear there of any repercussions at all. And I think that is the more pervasive thing that should make you more worried. Like they don't care at all about being persecuted for that.
And most of these, by the way, were 0 DTE calls. So if you guys are on options, it's basically these are out of the money calls, I expect. So they expire worthless. You lose all of your money unless there's an aggressive move upward. And wow, surprise, surprise, there was. So it's just, there's no way that somebody in the know wasn't doing this. So yeah, very short dated calls. There were a lot of them were 0 DTE though. It's sick.
Very suspect. I mean, shares is one thing. I can get behind your proposition like ETFs only instead of individual shares, but I didn't know that there was short-term call options. That's pretty insane.
I mean, I have a buddy. He works for a bank, and the bank puts restrictions on his trading in terms of like he sells options. He runs the wheel, and the bank puts restrictions on his ability to sell options. He can't do it shorter than a 30-day window, but he can do it on ETFs. Like he can run the wheel on shorter time frame than 30 days on ETFs. And guess what he does? He runs it exclusively on TSLL because it's an ETF. So my point is like, if there's a will, there's a way of people getting around these things.
Please tell me you sold out of your TSLL.
No, I'm still holding it. Of course I am.
He's a DJ.
Bro, do you know me?
Oh my God, dude. I'm not surprised.
I'm up on the TSLL. I'm definitely not up like double what I was. I should have probably sold, but I think I'm like 20%, 30% up.
I mean, Tesla was up over 20% that one day, I believe, like 22% whenever.
Yeah. Dude, the leaps, and they're leaps too. They're up like 80, 90% that day. So whatever, we're fine.
Bro's like, let it ride. That's not enough.
Yeah. Okay, Roy, I want you to respond to this one first. Here we have Buffett raises 90 billion yen from bond sale, loaded with cash, $334 billion worth of cash. What is this all about? Is he just loading up to buy, or is he loading up to reduce the volatility in his portfolio? Like what is going on here? This guy's 94, 95 years old.
Yeah. Once Tesla falls, he's just going to buy the entire company. That's a lot of cash. Like that's enough. He could buy PayPal 5 times over, like whole, for instance, which, I'm a little bit surprised that he's going that way. But, I think that there's a couple of things happening. So one is he's not young anymore. Yeah, exactly. I think that's it. What he's doing is he's de-risking some. He did quite appropriately on Apple, by the way, earlier a couple of months ago that, got a lot of people scratching their foreheads. But I think what he's wanting to do is make sure that there is liquidity there so his predecessors can make some plays. But I think in addition to that, there's a lot of uncertainty too. And he tends to do well perceiving risk. Like he came out, feels like a long time ago, but I think it was just maybe last month where he had said that this was a war, that tariffs are warfare, and this is an economic war that the United States is going in behalf of. That's not a good time for stocks. That's not a good time for shareholders. So he's de-risking in addition to that. So I don't know that he's buying anything wholesale at this point, more so than just making it so the next person can do that.
That'd be wild, though. Like his lieutenants, what do they call it? Greg and something. Man, and they have more modern ideas than he does. Like they do invest in some smaller cap companies. So that's going to be crazy. I mean, I don't know. I laughed at this comment. I'll read it to you guys. I saw this when I was looking for this tweet. Simon says, "Why didn't Buffett build anything great? He's 94. He could have built any magnificent thing he wanted to. He could have tried to start a city. Instead, he plays around in the market." So you can be the greatest investor of all time, $300+ billion worth of cash, and still you're just playing around in the market.
I mean, Berkshire is up close to 15% year to date. So obviously,
yeah, he's the only one that was active.
And honestly, cash is outperforming a lot of us. I'm actually, I might be green on the year again. It's close, but yeah, cash is like, well, it's not a bad place to be in the uncertainty, especially when you have that large of a position.
Right. Roy, what are we talking about next?
Robinhood.
Well, yeah, I was going to say Robinhood. Actually, I've been sending a lot of tweets Tevis's way. Let me pull some of those up. So actually, let's start there, and let me pull up one more. As far as actually, I'll get 2 more tweets. So give me 1 second, guys.
What's your portfolio look like, Elijah? Because I know you make content, and I know you hold HIMS, and you hold Tesla, and you hold Robinhood. I can't remember what else you hold.
I'm a very, very concentrated portfolio. Obviously, I mean, I've come on streams of yours in the past, and I've mentioned Tempest AI. That's my biggest holding. HIMS is second. Hood is third. Tesla fourth, and fifth is Rocket Lab, and that's it. That's my whole portfolio. That hasn't always been my portfolio. I used to be pretty concentrated in the Mag 7. I'd say towards the beginning of the year is when I kind of made this little 5-group wonder. So
it's a classic YouTuber portfolio, man.
There you go. Yeah. Listen, man, we're green year to date. It's working out for now. If it doesn't, I'm showing it my whole progress. So transparency, dude.
Yeah, that's nice. All right. So I thought this was pretty interesting. So you're all Robinhood shareholders. And we know, of course, that they have these sports contracts.
Oh man, you're gonna get me fucking heated up with this dude conversation, aren't you? I can see it coming. Yeah, go ahead.
So Kalshi is who's back-ending this. Tariq Mansour. I'll look at one of his tweets in just a minute. He's a CEO, ex-Palantir guy, by the way. So yay. But Robinhood partnered with them to offer the events contracts. Now, some states, actually quite a few of them, ended up launching lawsuits and trying to prevent this from happening. And regardless, the total March Madness volume of Kalshi and Robinhood actually exceeded, as far as the amount traded, FanDuel, DraftKings, BetMGM, Fanatics, Caesars, ESPN Bet, Rush Street, Bet365. Never heard of some of those. So is that surprising to you guys? Like this quickly?
Well, I'd like to see the breakdown of how much is Kalshi alone and how much is Kalshi via Robinhood.
Yeah, it's probably when I was looking at some of Jacob's numbers, and he was looking at this daily, it seemed like it was 2/3 Kalshi and 1/3 Robinhood, but Robinhood was actually getting a little bit closer to parity there. So yeah, but I mean, it's all through Kalshi on Robinhood, so it's shocking for me anyway to see that outperforming what's on like DraftKings and FanDuel. You hear about those guys all the time. I'm not a bettor.
Yeah, all the market should be on here too. It's not.
Yeah,
it's definitely surprising. I mean, I think the trend is going in the right direction for Robinhood, but seeing it this fast, already top of the charts, it's pretty impressive and shocking.
Yeah. Appreciate that, Curtis. And then this was a tweet from Tariq Mansour. I said Tariq. I apologize. Today, the federal court in Nevada granted Kalshi's preliminary injunction and blocked the state from trying to prevent Kalshi from offering predictions markets. We are grateful for the court's careful attention to this matter and recognition of Kalshi's status as a CFTC-regulated exchange. On to the next step. So this is one legal fight won, but it's against Nevada, which is probably the most prominent, is going to be the most vigorously defended or prosecuted in civil court. The CFTC is pretty much fully behind this at this point. So there are still a number of states that have legal proceedings that still need to get pushed out, but likely this sets some sort of precedent. There will be appeals, there will be court battles for a long time. It looks like that sports-related events contracts are here to stay. So it's interesting. You know, I'm not the biggest fan of this product for Robinhood itself, but yeah, it's doing really well.
Yeah, I mean, it's interesting, man. It just goes to show you that the distribution mechanism is the biggest factor here. Like I said before, that the secret sauce for Apple was that the iPhone was the Trojan horse into every household in America. And it's the same here, right? Like, you had all of these platforms, DraftKings and FanDuel, and all of them try to build their brand, try to build their presence over years and years. And all of a sudden, since everybody has the Robinhood app, all they need to do is open an adjacent market and they'll capture a huge chunk of that market in a fraction of the time simply because everybody already has the app. And it's just such an interesting way to dominate that the large companies just get even larger and larger. This was what happened with Microsoft is the prime suspect for this. They've been doing it for every single thing they released since the beginning of time, where they leverage their network effects to launch complementary product offerings and then roll it up into their bundle and just crush competition that way. They did it with Slack, right? Slack was doing organic growth for the longest time. And then Microsoft launched an inferior product in Microsoft Teams. I'm not saying that's the case here, but they leveraged their network and bundled it into the Office suite for free, basically. And it just made economic sense. And it made sense from a ease of use perspective for all these companies to start using Teams now instead of Slack. And it's the same thing with Robinhood and betting, right? Because everybody already has the app. It's already known for its seamless user experience. And so they're like, okay, here you go. Here's betting. And if they offered something else that was complementary, people would use it. It would have a similar adoption rate if the barriers to entry are not large. Like, it's a little bit different for like credit cards or banking or whatever, because there's more stakes there in terms of checking your credit and getting approvals and whatnot. But if you want to transfer some of your funds and go gamble on a basketball game, cool. You can do that through the app. No problem. You already have it downloaded. Just do the app update and you're good to go. So I think that is bullish if you're a Robinhood investor. Absolutely. But it's like, it's so crazy from a user experience perspective. You're just getting this entirely new app auto downloaded onto your phone, even though you didn't really ask for it. Like, I could have been somebody who never gambles. I don't know what DraftKings is. I don't know what FanDuel is. And all of a sudden, I now have a tab on my Robinhood app that's like, hey, you want to gamble on a basketball game? Maybe I get a push notification because it's on. Like the game's on. And then I can also lose money on Duke. Yeah, go ahead.
Get some confetti on there as well.
Exactly. Well, I'm just saying, it's like you sign people up by default to all the complementary product lines that you will ever introduce into the future. And that's a crazy thing to think about, like, just as a concept. People sign up for you for one product, and then they also de facto sign up for every single other product you will ever launch on that same app.
Yeah, I've talked about it before. I don't love it. I'm neutral. I like revenue. Obviously, it's going to be accretive. But as far as like, it feels like it should be separated from their actual trading app. That's where I'm at. It shouldn't be. I don't know. But I'll say, if you throw up this on Tevis, this is not the only thing that they do offer. By the way, they are offering contracts on masters, and you can trade in and out of these at any time. You don't have to wait until the end. I do like that. But they have a lot of economic ones, and actually some of these I might end up using. Fed decision in May, Fed's fund rate in May, inflation in April, CPI in April, jobs numbers in April, U.S. GDP growth in Q1, and now U.S. gas prices in April. So some of these in particular, like CPI, inflations, job numbers, even GDP, those can be actually really useful hedges. Or when you think, hey, the market has it absolutely wrong, like I thought earlier on rate cut probabilities, you can make a bet on that rather than just like bet on individual companies. You can bet on the actual thing and get in and out of that contract immediately. And I love that. Sports, I'm not going to touch. Wish it had been done a little bit differently, but hey, at least they're making money. And I would prefer, since it's going to be done anyway, it's inevitable at this point, that somebody like Robinhood does it, where they have no vested interest in you winning or losing. They're just there to offer a platform, and it's a lot cheaper for the end user that can get in and out immediately. So,
well, actually, I have an interesting little anecdote for this that applies, because the traditional books have not really expanded that much into events outside of sports. They're starting to, and some are more advanced than others, but by and large, the leaders are Kalshi, Polymarket, and Robinhood in that regard. And I wanted to bet on politics, but I couldn't because I would need to basically have like, I think Polymarket is all through like crypto, and I didn't really want to go that route. And so I was looking at books to do it here. And what I noticed, Roy, was interesting. I downloaded Bet MGM because that was one of the only ones that offered it. DraftKings didn't have it. And I downloaded it for that specific purpose. I put in some money and I bet on the outcome of the election just for fun. But what I noticed was the odds were much lower than what they were on Polymarket and Kalshi and just these events, contracts, markets, because the book sets what the payout odds are, right?
Oh, okay.
And so they're basically like, I mean, in Canada, I don't have many options. And so I'm sort of beholden to a lower payout or just worse odds by taking the same risk. And I would love for me to have more granular options to bet on events in general, but I don't have that that option here. I don't have that selection. So I think like for the audience of people who do want to take advantage of that, it's amazing that they have the products at their disposal.
Yeah, for sure. I mean, I'm in the same boat as Roy. I'm personally not going to be using any of the products. I mean, I think it'd be kind of fun to be betting on like the Fed rate cuts and this and that. But in terms of sports betting, I've never been a sports betting guy. So me and Tevis are different. But regardless, I think it's a good bump to revenue for Robinhood. What I'm curious of is, when you look 5 years down the road, what's the prediction market side of Robinhood going to look like? How much bigger can it get? Like, what are we going to be betting on 5 years from now?
Well, I think it's going to be dynamic where everybody creates their own market, right? Like, and you're going to have small, and you can like Polymarket and Kalshi already have this where people do make their own markets. But I think you're going to take it to a micro level, like YouTube for gambling, right? I can make a market to say, hey, which one of the SoFi Weekly members leaves the group first, and you can have Tevis, Roy, or Tanner, and viewers of the channel or of the show can bet on that outcome, right? And that's like a super, super micro event in a niche of a niche of a niche. But the point is like, you're not going to have any restrictions as an individual to make your own markets. And you're going to have this playground, this marketplace of thousands of different market makers, of completely small creators, small individuals. That's at least how I see it. Because if Robinhood or Kalshi or Polymarket is the curator of the content, there's only a finite amount of things that they can curate on their app that has a big enough sample size, a big enough audience. But if they're trying to optimize for any type of fee or rake that they would get, then I could totally, like as their product person, I would probably be saying, okay, let's open this up to have people create their own markets, because they do a couple things. They advertise on our behalf, because if I make the SoFi Weekly market, I can say, okay, guys, go vote in the SoFi Weekly market. There has to be some benefit to the user or the creator of that market. They bring way more people onto the platform, because SoFi Weekly viewers that are not, gamblers on basketball or baseball, but watch every single week might want to, bet on that. And then they basically increase the number of potential events you can have by multiple factors, because it's not only fixed events that the entire world cares about, hundreds of thousands of people. Now you're getting to micro events that only a couple thousand people might care about. So like from a product perspective, that's where I see it going. But I'm not sure. Roy, what do you think?
I'm not sure, but I know that there's a lot more TAM in this area. Like that's one of the craziest things for me is when I first got into Robinhood, I'm like, okay, they're positioned very well. They're going to do very well. They're very cyclical. This is one of those products where I'm sure in recession times, at least I'm thinking, maybe I could be wrong, that people are more degenerate than that it would receive less volume, but it does differentiate their actual income. It's not just solely based on crypto and the stock market, or that's like 90% of it. So that's actually kind of nice. But there is a huge appetite for this. Sadly, it's even more prevalent in younger generations. Tevis, you're kind of like the poster child for it. As far as like sports betting and stuff, like a lot of younger folks are in it.
I mean, thanks for calling me the younger generation. I feel good about that.
You're younger than me, Elijah. I think you're probably a little bit younger than Tevis, but
Tevis is still old as hell. Don't get confidence up.
The one thing I'm hopeful of, but I don't know that it will actually work this way, is that maybe in mass. Like I know that there'll be some people that do that, but there'll be people that go to Robinhood and sign up simply because of this feature, and maybe they stay because they're like, hey, I actually need to invest. Great, that is fantastic. I think it might be more often the other way around, where people are on there for investing and like, you know what, forget investing, I'm put it all on Duke, and then they lose it. And that's really tough for them. I mean, ultimately, they're adults. It should be legal.
Too soon, bro.
Yeah, June had mentioned, I actually saw a couple of people mention it too. Webull is looking at doing an IPO. I think that that's imminent. I don't have the date. It was something that they were talking about a year and a half ago and building up towards. And there was a question earlier. It is live. Okay.
Oh, wow.
There was a question of like, is this a bad thing for Robinhood? It doesn't matter whether Webull is a publicly traded company or not. They exist. They tend to try to give more interest or rewards for going to Webull, and just because they don't have nearly, I think, the level of attraction. Their cost for acquisition is a lot higher for Robinhood too. And I think it's a decent company, but I just don't see them being on the cutting edge like Robinhood is. What tends to happen is they're kind of the cheap Chinese knockoff, which I don't know that they are based in China, but they have Apex as far as a clearinghouse. But they tend to just copy whatever Robinhood does, the best of their ability. So,
yeah, I mean, I look at, and this isn't probably the best comparison, but similar. How do I look at AMD versus NVIDIA? Why do I want to own AMD when I can own NVIDIA? And that's how I feel with Webull versus Robinhood. Why do I want to own Webull when I can own Robinhood? I mean, the roadmap is clear. My conviction's bulletproof. I just don't see a reason. And if you do, let me know. But I don't see a reason why someone would pick Webull over Robinhood.
Yeah, not even for valuation. Like if I was going to bet on another one, maybe IBKR. But I wouldn't really be interested in that.
I mean, that would have been a very profitable bet for you. They've done tremendously well as a dark horse pick for many, many years.
Yeah.
Because you bet on an entire sector, right? So it's not like you diversify execution risk by betting multiple names in a space. You would bet in other names other than Robinhood because you're bullish on the space for like, okay, generational wealth transfer, more retail investors as a whole. Not everybody's going to pick Robinhood. Sure, some might, most might, but not everybody. And Robinhood has a disproportionate amount of attention from retail than others. And so you could form a narrative around why Webull might be a better pick because they're going to benefit from the same wave and they're going to have less hype about them, meaning that the stock is going to be less inflated. Same as Interactive Brokers or eToro or any of the other ones. I understand the pick. I'm just saying, like, there are many reasons why people would pick it to find arbitrage.
Let me share this too. One last piece of news on our Hood Weekly. Just kidding. But this was pretty interesting. Robinhood, I think, was at one time like number 37 of all free apps. Usually finance apps don't do that well in the overall ranking in the App Store for Apple in the United States. And Robinhood actually ended up hitting number one for a little while. I'm guessing that a lot of this is due to the timing of like the March Madness advanced contracts, but also there's a lot of people that were buying the dip on retail. PayPal is with a nice showing there too, which isn't too surprising. They're usually up there. Any thoughts on that?
Yeah, I think Robinhood's going to be a big beneficiary of this volatility. That's actually what my last video was pretty much focused on. Transaction volume's going to go way up. I think you had some data released not too long ago about it was like record options traded, something like that. So yeah, I think we're going to see a great quarter from Robinhood. I mean, obviously, if we see a slow down bear market, then we're going to see Robinhood suffer. But yeah, I expect good things.
Yeah. Some young boy said, Robinhood can't do what Weevil does. I love the flag.
I think that's probably sarcastic, but if not, I guess tell us what Weeble's doing that Robinhood can't do. There are some things that Weeble offers that Robinhood doesn't have yet, but that doesn't mean that they can't, and vice versa. Can we talk inflation, guys? Because I think that this was a very interesting week. If you saw the CPI and the PCI, I always get PCAE and PCI mixed up. PPI, there we go. PPI.
So yes, let's do that. But I think this is the time to tell people that you can throw your questions in the chat. I will go ahead and bookmark them. And at the end of the show, we're going to do our answer period. You can ask questions to Elijah as long as it's not about his looks or his workout routine, because I'm not going to entertain either of those.
Good guy.
All right, Roy, take it away.
Okay, so CPI came in actually cooler, and it was interesting. I won't go into like the breakdown of the numbers, but what I thought was really interesting is there was a lot of expectation that this would come in a little bit hotter than expected by a lot of people, just because companies are like, hey, we need to go ahead and buy a lot of product all at once, just in case these tariff things do hit and land. And so this was a surprise, a nice surprise. It came in at 0.2, actually cooler than expected. And then, of course, we had the PPI that came in. It came in at 2.7 today. Was it yesterday? It was yesterday. No, it's this morning. And so this is really interesting that it came in significantly cooler. I think that the expectation was either 3.1 or 3.2% year over year. Instead, it came in at 2.7, so it's back in the two handle. We'll have to see what PCE does. I'll have to look to see when that is. And of course, this influences rate cuts. And so this is where we're at right here as far as rate cut probabilities for the end of the year. Currently, right here, we're at 425 to 450. And it's kind of split between 3 rate cuts and 4 rate cuts right now. There's a lot of movement over the last month, especially you can see right here. And those numbers, probably more than anything, impact the rate cut. So any thoughts on inflation? Is this just so I'm seeing like both sides. I'm seeing people saying inflation is dead. It's toast. It's time to cut. And I see other people saying, no, we're going to go back to 4% inflation because of these tariffs. So where are you guys on that?
You first, man.
Yeah, I mean, look, I think it's complementary to the Fed. I do think we're going to have more rate. Like I would lean towards more rate cuts rather than fewer than status quo. I think that's good for companies like SoFi. I think that's what Trump is kind of pushing, for the market as a whole. And if the inflation were to come super high, then obviously that's sort of off the table. But yeah, I don't know. Like it's a good print. I don't think we need high inflation on top of this, mess that we have right now with the markets. I don't think the markets would take that one too well. But yeah, I do think we're going to have more cuts than not. But then again, the other side of that is through this tariff situation, if that might drive inflation back up. Like I think the Fed is going to be in between a rock and a hard place, right? Because they can see the tariffs on the horizon. they can't read the president's mind. They can't read the minds of other world leaders, whether they will or will not retaliate. And they see inflation going down and obviously growing pressure for them to cut. But if they do cut, then they risk inflation going back up. And the worst thing that they can possibly do is cut and then have to raise again in the future. And so it's a precarious position, I think, for them as well, to the point where I think the safest answer, if I had to bet on the response, I would say, like, my guess would be that they would stay put for longer until they see how some of this tariff stuff plays out. And more importantly, how some of the other prints come in, and then cut from there. But on the whole, I do think we're going to see more cuts than what they had anticipated in that first meeting in, what was it, January or December.
Yeah, I think it's good news. I mean, the reading was good, but like you said, I mean, there's just so much uncertainty on this tariff policy and, you know, the move going forward. Because, like you said, if we do get stickier inflation or even inflation ticking up, then it's going to be a whole different story. Is the Fed going to raise rates? It's just a complete mess. So, you know, I think the Fed should cut, but like you said, I'm not going to be surprised if they just hold steady while all this tariff stuff plays out. And hopefully we do get some more deals and negotiations coming soon, but who knows, man?
Yeah, I was, again, surprised, and I may continue to be surprised. I expect that the tariffs will give at least some temporary inflation. We'll see. I'm not going to use a T word, the other T word that Powell was a fan of, that he brought out again for some reason. I think that we're probably not going to see a cut in May, even though we should, but June seems and feels very likely. Just a one rate cut, 0.25 or 25 basis points. And really, it seemed like if tariffs were not in the picture at all, we would see a rate cut in May.
Yep.
Just why would you not cut when you're at 2.7% on the PPI? Why would you not cut when you can see clearly that there is weakness in the CPI and it's not all energy related at all? Plus, a lot of the factor that's keeping the CPI held up is shelter, just the way it's calculated. And if you keep rates where they are, that will continue to remain elevated in almost every circumstance. So, but yeah, we'll have to see. The one thing that I really did like, though, is that we've moved in a year from where Jerome Powell was the most important person on the planet for the markets. And that's no longer the case. Now, you may not like it, but I prefer at least that it's somebody that's elected or a CEO of a company or something like that, rather than a Fed chairman being the person that everybody hangs on every single word. So at least that's nice. It's very volatile. It's chaotic, but I like it.
Yeah, I think the market is just really in wait and see mode, and that's it.
Yeah. And so one more thing on the 90-day tariff pause, which I need to probably do a video or post on this. The 90 days was pretty interesting. That gets us that gives a lot of companies certainty for a short term. It's not long enough. 90 days is not to make long-term plans as a company as far as capital allocation, expenses, launching new products, especially internationally. But it is long enough for when you're offering next quarter guidance. So I was thinking, since we're entering earnings season now, didn't seem like that long ago when we finished up earnings season. I don't think this is the reason why Trump did it or necessarily for the 90 days. But previously, if we didn't have this pause, we would see a lot of companies like Robinhood where they wouldn't offer guidance at all. Now, of course, Robinhood gives us 3 months of numbers, basically. So we know a lot of the numbers going into the earnings. There's not that many surprises. But I think that there's a lot of companies that would come out, like even maybe Apple, that would say, we can't really give guidance for you guys because we don't know what tariffs are going to be. Now, it's pretty clear what they are likely to be over the next 90 days. Now, can things change on a single tweet? Absolutely. But I think that it'll give enough certainty for a lot more companies to give guidance, which probably will be a very good thing for the market. I do think that we're going to see a lot of tariff mentions in earnings calls, and that's something that's worth paying attention to, is what companies think that they'll be impacted by tariffs and how much. It's important to almost every company, even PayPal, which you wouldn't think would be that impacted. There's some impact there.
Yeah, for sure. I mean, we had bank earnings. They were great. They were great. There was no sign of recession there. Some companies are going to be more sensitive than others, but we'll see how it plays out, man. I'm very curious on how these companies guide.
Yeah, I'm not really hopeful because there's no CEO worth their salt who would say, "Oh, well, tariffs are on pause, so we're not going to account for those in our guidance." Like they're obviously it's a moot point. Tariffs can be on pause for 6 months, and just the fact that it's going to be unpaused at some point in the near future is going to cause more caution in CEOs. Anthony Noto being the first one. So I think for this earnings season, it's we don't have any it's an open issue, right? It's there's no resolution to it right now. It's not like, okay, they're going to be on pause for 90 days unless X happens and everybody can hyperfixate on whatever X is. It's just they're on pause right now. Nothing more. So
let's go into questions. You got some questions for us, Tevis?
Yeah, sure. Tevis, what's your buy and sell for this week? I did not make any stock purchases at all this week, nor did I do any sales this week. I've been just drowning in day job stuff. So mine's going to be pretty boring, but these guys can answer.
Just NVIDIA for me. I've got an NVIDIA DCA and a Bitcoin DCA. I need to start buying PayPal relatively soon too. So,
as for me, just Robinhood and HIMS. That's it.
No sales for you guys? Just buys?
Well, I sold covered calls, but
yeah. Will I keep going to the gym? Elijah can maybe answer this for Lisa.
No.
There you go. Where do you see SoFi stock price by April 29th? I'm guessing that's when earnings is around.
Have to look. They did it right. Yeah. Let's say that it is.
What's it at now? It's like 11?
Yeah, close to 11, just under.
1071.
I think if the market cooperates, 1450. I think if the market does not cooperate, then 11, 12.
You know what number I'm going to say, Tevis?
Go ahead.
11.
I knew that.
You're not in SoFi at all, are you, Elijah?
I'm not.
Okay.
Get out of here, sir.
Listen, man, I was in the past, and then some changes came around. I was introduced to a lovely, lovely lady called Robinhood, and I fell in love.
God, stop! We're gonna get so much more hate now.
Well, this is not SoFi Weekly. It's just in SoFi Weekly's time slot. So SoFi Weekly is with Tevis and Tanner tomorrow. Yeah, I've been kicked out officially just because I can't make it tomorrow. So I'm kicked out just for one day, but that's how it is.
Will you guys have a HIMS Weekly since everyone owns it now? I think he means the three of us. I found it really interesting because Manuel sold out of HIMS recently. I saw that. Yeah. And that was shocking to me, insanely shocking to me. But at the same time, I think it was shocking to me because I've talked about this before around the duality of being a content creator, talking about your positions and how that in itself locks you into some of those positions. The reason why HIMS Weekly didn't continue was because of time zones. I couldn't do anything prior to 5 or 6 p.m. because of work. And then after that was midnight onwards for Manuel. But yeah, I don't know.
I don't think it's a company that has enough news and interesting things every week to do a weekly show. There's usually HIMS. I don't think so. There's usually there's usually one topic per week, and then a lot of things that you'll be hitting again and again. Which you could do it that way. You've got a lot of short interest. You have a lot of legal battles going on. I think HIMS has enough news. You could do a bi-weekly. no, that's not right. Bi-monthly. But yeah, weekly would be a little bit much. And I don't have time, frankly, right now for another weekly show.
How are you guys positioned for the post-tariff pause? Post-tariff pause. Does it just mean tariff pause?
I guess now. Let's maybe. Oh yeah, when we resume. Okay. So my strategy, when I was looking at this weeks ago, I realized I wanted a little bit more cash, and so I sold out of pretty much every expiration in 2026, with the exception of some Robinhood spreads, and then I have some leaps that expired in December 2026, which felt like enough time. There's a very small position too where I have it also, but I sold like 90% of my 2026 leaps, including my SoFi ones, which were still up. Still in SoFi very much, but that position is reduced. I'm keeping my 2027 leaps in SoFi and happy to do so. There's just a lot of uncertainty, and with options, unlike stocks, you can hold stocks forever and it's fine. Options, if they don't hit your strike by a set date, they're worth nothing. So I deleverage risk. I've been DCAing and not trying to bottom the market with the cash that's raised. In NVIDIA specifically, I've been buying Bitcoin. I have a buy every other week. I plan to buy some more PayPal. Maybe after April, I'm probably going to buy more Robinhood, depending on where Robinhood is at. Maybe even top off a little bit of SoFi too, depending where SoFi is at. I think that this can also occur, a lot longer. Like this is not resolution right now. There is more certainty in the market, but I don't think we're going to see all-time highs again until there's some actual deals that are made that are not just a 90-day pause. And like the biggest one really out there is China. Like even if Bill Ackman's scenario happens, China is a massive, massive player, and there needs to be some sort of deal that happens either with every other country in the world, basically, or with China itself. So yeah, myself, I'm not trying to guess what's happening. I'm just slowly DCAing into stocks that I find worthwhile over the long term and position my portfolio accordingly.
Yeah, I'm just full porting GameStop and Newsmax. No, on a serious note, I mean, you've seen just a huge shift to risk off. A lot of the names I love have just gotten beaten down. I mean, I've held HIMs from 20 to 70 back to 25. It's been crazy. Same with Tempest. I mean, from 40 to 90 back to 40 now. So really what I've been doing is just loading up on those names that have been beaten down. I'm in love with HIM's valuation right now. Robinhood as well, but HIM's really, dude, I'm just obsessed with HIM's at the moment.
Yeah, I think so. The pause is 3 months, right? It's not a short pause. I think there's a lot of positive news that can come in that time period that can bounce the market back. Obviously, we're not going to go back to where we were or even near where we were because there's looming uncertainty on the horizon. I think in that period of time during the pause, if we do bounce back, I'll be looking to get out of some levered positions and just buy the underlying stock. Most likely. Post pause, I mean, yeah, it's just going to be DCA, every couple of weeks, every month, put money in and buy the same names I've been buying for the past several years. Probably I want to start a position in NVIDIA because it's like, it's so cheap right now. Yeah, nothing like super special. I saw this question too, which is kind of related. Like, if the tariff situation persists for more than 2 months, will you change your portfolio? Like, are you going to make any adjustments as a result of tariffs? My answer is not really. My only adjustment would be just de-lever as much as I possibly can and just hold the underlying. And if the underlying falls for an extended period of time, it's like, well, cool, I've been there before.
Yeah, same. I've got my position where I'm comfortable as things are. If they continue and persist for a long time, yeah, I'm fine with it. I've done the moves that I need to that I felt like will keep me able to survive. So I've got a pretty big hedge too in my portfolio, which is working quite well. Had one earlier too, and I sold and took gains on that. Thank you, Jack Dorsey.
Trump to announce a tariff for pharmaceuticals, isn't that bullish for him since people want a more affordable access to health? I'll go Elijah and then Roy.
Well, listen, I mean, HIMSS facilities are in the U.S. They produce their compounded medication in the U.S., so I'm not really worried about tariffs impacting HIMSS in a negative way. But the competition, I know a lot of pharma products are imported from China and elsewhere, so that could definitely impact HIMSS competition. But I mean, is it bullish for people who want more affordable access? I guess you'd say that because it'd probably increase the prices of their competitors. So yeah, I'm not worried about HIMSS and tariffs.
So yes, largely agree. Just for some context, APIs and the bulk ingredients for pharmaceuticals, especially for GLP-1s, I think it's like 70 to 75% source. I did a post a while ago and a video on this too, in India and then also in China. So there is some impact even on those products like liraglutide, which is coming out for HIMSS, which I don't think is a great product. But I think that the competition gets hurt a lot more so here. But even without that, like what you have to see is with HIMSS is they are offering GLP-1s on their platform. Anybody can do that. That's cool though that they're doing that. But look at the price of those. They are like 10 times the amount of what they were able to offer while they were able to compound these. And so for a lot of people, they're seeing sticker shock where they're like, okay, if their insurance company does not provide benefits as far as that, and some are actually rethinking it just because they're having some of those first order people that had success when GLP-1s got off, did not change anything about their lifestyle, and they're fat again and they need it again. So HIMSS is positioned very well as an alternative more so than anything to the GLP-1s. So for instance, their oral solution, which is not their only product, but the oral weight loss solution doesn't require injection. It's not nearly as effective as the GLP-1s, but it is effective and it costs $69 a month. That is incredibly compelling when you are a person that you're like, okay, I need a little extra help losing weight. My insurance company does not cover it. Am I going to go for one that'll help me lose a good amount of weight that costs $69 a month, or shell out $1,000, $1,500, even $2,000 a month on GLP-1s? Well, some will pick the GLP-1s, but a lot of people are like, hey, let me try this oral stuff. There's a reason why HIMSS issued the guidance that they did for the year. It was surprising. It still surprises me, but they've never missed in terms of revenue on their guidance. They've always beat. A lot of that was related to weight loss product, and it's not all the nutrition line or liraglutide that they're expecting is going to get them over the edge. They're going to see meaningful increase in their oral solution. And the tariffs don't, like, let's say the tariffs make it 10% more expensive. Okay. GLP-1s now cost, let's say $1,700 instead of $1,500 on average, and 10% more expensive on the oral, $77.
Right.
That's not going to scare anybody away that was already okay with 69.
I agree. Next question.
We hit the hour and a half mark, Tevis, so you know what time it is?
Sure.
Ad break.
Elijah. Mark's ads.
Yeah.
Speaking of HIMSS, here's a HIMSS ad.
Yeah, exactly.
This is kind of tongue in cheek, but I wanted to bring it up. Does anyone else think Trump is a complete and utter moron? I'm sure a lot of people were asking this week with the whole tariff decisions. What I will say is simply that I think from an economic perspective, or just from a success perspective, he has surrounded himself with very traditionally successful people who are accomplished executives of large companies, and that tells me a couple of things. That tells me that he wants effective people that are competent. He wants outsiders. He wants people that have successfully run large organizations in the past that can deal with large teams at a fast-paced environment, and people who have seen traditional success doing this, as noted by their net worths, right? Like Besant is a billionaire, Lutnick is a billionaire, Elon's a billionaire, and they all have run companies in the past. And so I think that by just chalking it up to a moron, like, it is a super aggressive move And I'm sure a lot of people will absolutely say it's a super stupid move if it doesn't play out and this triggers a recession. But, I think the jury is still out to see how it plays out until then, because you could very easily chalk it up to, oh, this is a very stupid move because of the immediate shock to the market and the negative reaction. But he has a smart team around him, and I sort of trust that team more implicitly than I would have trusted any other political team, simply because that team is comprised of outsiders. But maybe that's my rose-colored glasses. I don't know, Roy. What do you think?
Moron is the wrong word. I've not been a fan of the way that this has been handled at all, but he's not a moron. He's incredibly good at two things: being a showman, and he's incredibly good at negotiation tactics. He tends to just come out guns blazing and then backs off. So this honestly shouldn't have surprised me as much as it did as far as his tactic. It kind of did, just based on his first administration, which different just because of the layout of the Senate and the House at that time. I don't like it, though, just because it does cause a lot of chaos. It causes a lot of pain for people that are close and near to retirement. First-time market participants might say, you know what, it's not worth trusting the market at all. It makes it very difficult on individual companies to plan out things. Now, if things work like in the Ackman scenario, let's just say hypothetically, he'll go down as one of the best presidents. He'll go down as a top 10 president, at least in the second term, just because with deregulation, with changes at the SEC, with the advent of AI, with what's going to happen with the GDP, with what would happen with international trade, these for sure would be the new Roaring 20s. I think we're already there anyway, as long as this doesn't mess it up, but even more so. And it sets things up very, very well long term in a time that I think, frankly, the United States had to pivot away from this cycle of let's just print infinite money, hope the United States dollar can continue to be the global reserve currency. Eventually, that was going to go away. But this absolutely can blow up. It can absolutely cause long-term distress and stress. Smoot-Hawley was the tariffs in the 1930 that ended up hitting, and it was something that was very similar, where they basically said we need to protect United States manufacturing, so they passed these tariffs. Thought no big deal. It ended up actually that they were a lot more aggressive than initially thought. Democrats appealed to Herbert Hoover to veto it. He didn't want to go against his own party, so it wasn't really led by the president at that time, but the Republicans in office. And as a result, it launched a global trade war that almost every single economist and historian agrees prolonged the Great Depression, exported it globally, even to countries that were not hurting at that time, and ended up hurting a lot of international relations at a time when we didn't know it at that time. But a little bit later in that decade, Adolf Hitler came to power, and a lot of the moves that he was able to make may not have been able to be made if Smoot-Hawley had not damaged economies and damaged relations and caused a lot of distress. So there can be really massive negative ramifications if this does not go well. And I have no certainty as far as a way it'll shape up. So he's either going to go down as one of the greatest or, Herbert Hoover 2.0.
Yeah, I agree. I think, arguably Donald Trump's one of the most stock market focused presidents there is. Likes to brag about all the time. And dude, if we get some negotiations, we get, lower costs for trade, lower tariffs across the board. Regardless, I think you have to respect Trump for going after our debt problem when you have the country going towards bankruptcy. I consider myself pretty pro-Trump, but do I agree with his approach to tariffs? Not really. Don't agree at all, actually. I'm not going to say not really. But
same.
We're going to see how it works out, man. We're going to see how it works out. Do I think this is going to be the end-all, be-all Armageddon like the news is making it out to be? I mean, no. I've never the fear, and there's a lot of uncertainty for sure, don't get me wrong, but I've never seen the media pump so much fear. And it's not just the media, but even on Twitter or X or whatever. But dude, people are panicking. People are freaking out. And like you said, excuse my language, shit can hit the fan. But do I think we're going towards a recession? Personally, no, I don't. But what we need to see is just more negotiations. We need to see less ego. That's a big one. So we need some more negotiations, and we'll be in good shape. But I personally don't see Donald Trump allowing the stock market to crash on his term. I mean, we're already down 20%, but I mean, I don't see, with a dude with an ego like him and who likes to brag about the stock market performance like him, I think we'll be fine.
All right. What are your earnings predictions for Hood? I think we can skip this one and just say catch the Hood weekly show. It's on Mondays. Roy, Amit, and Tanner do the show. It's a great show. And go ask this there.
So it's funny because the Hood Retail Show said on my channel, "Don't skip my question, please."
All right, fine.
Let me just give like a 20-second thing. So the numbers are there. January, February, most of March. You can look at them. They're very strong. They don't do guidance. Events contracts, we know what they did. It's going to be very good. Since they don't do guidance, I think it'll be pretty well received. I think that a lot of that selling pressure that hit like last year when they had ridiculous beats and then they sold off anyway, I think that's gone and done away with. Institutions are loading up, as are people like Elijah. They just, and Tevis and myself. So I think it's going to be very good. The volatility is good short term. If this continues long enough, it's kind of like on a roller coaster. You can be on a roller coaster and enjoy it. And that volatility is great for Robinhood. If you're on it all day, you get sick and you want to get off.
Cool. All right. Do you think this freaking Robinhood questions, man. Do you think this volatility will make Robinhood earnings even better this quarter if we are still down? Hearing retail has been buying it up. One of you two. It's not the
Elijah, you want to take this one?
Yeah, I guess. Like I said, volatility, I expect Robinhood to benefit. But I feel like you pretty much just answered this question. Like if we see a longer and stretched out bear market, then obviously it's not good. But short-term volatility is good. End of story. The end.
Great. Somebody asked, like, hold on, where was it? Because somebody asked this like tongue-in-cheek question around like, why are you still working as a product manager when you're a multimillionaire? And I said, I'm not. And then I said, life without work is boring. And then Curtis mentioned this. I like the question about Tevis working as a millionaire. No way you could retire and actually live comfortably at our age below a $6 million net worth. And then he also said, I'm assuming Curtis is a he, even $1 million in your late 20s means nothing anymore. Makes living day to day nice, but not retiring. And I think there is something to be said about those two things. Number one is finding fulfilling work. And like, so for example, for me, I didn't look at the market at all this week, not necessarily because it was like red or super volatile or whatever. Like I didn't even make content this week because I was just so, heads down on the work that I was doing because I'm enjoying it. And that hasn't been the case for the last little while. So I think there is something important to be said about that as a pursuit. And then the second piece I found was interesting is like this inflation. What is your net worth? Like, what is your what is it called? Like your FU money number. Any thoughts or commentary on this? Like, I remember that clip from Succession where they were talking about like the guy who had just. Have you guys seen Succession?
No, not really my type of show.
I'll try to find the clip. You guys give me your thoughts, and then I'll try to find the clip.
So on this, like if you're, there's a lot of retirement tools out there, and if you guys have never looked at as far as like what you need for retirement, use those. They're very useful. One of the things that actually is very useful to look at, and it's not like a hard and fast rule, but is a rule of 4%. And so the idea is that you can usually and safely take 4% of whatever is invested off, just because things compound. And like you can look right now, 10-year yield is up above that, so easily you can take 4% out. So if you had $6 million US net worth, you're looking at $240,000 a year that you're just taking out. Anybody can live on $240,000. I mean, like, if you're in California, are you going to be throwing lavish parties and stuff all the time? Great Gatsby style like Tevis? Probably not. And the other piece that I'll have here too is $6 million. Yeah, Tevis can't live on that because that's like $100K in USD if it's Canadian. So,
all right. So enough of that. I want to play this clip. So basically, all of these people are like multi millionaires, if not billionaires, and then this guy here in the middle, Greg, he's like just starting out as like the intern. So let's play the clip. It's only like 20 seconds.
I was just talking to my mom, and she said apparently he'll leave me $5 million anyway. So I'm golden, baby.
You can't do anything with 5, Greg. 5's a nightmare.
Is it?
Oh, yeah. Can't retire. Not worth it to work. Oh, yes. 5 will drive you un poco loco, my fine feathered friend.
Poorest rich person in America. The world's tallest dwarf.
The weakest strongman at the circus.
Mm-hmm.
That's how I feel sometimes about like, oh, well, I could retire on 2 million or I could retire on 3 million. It's like, can you? And what are your limitations? Where are you going to live? What's your lifestyle going to look like? So on and so forth. So that's what that comment reminded me of.
Any thoughts on that, Eli?
Nah, man. All I'm going to say is money isn't everything, man. Have a family, have a wife, kids, and be happy.
And what Tevis said earlier too, like finding meaningful work. Work doesn't mean you have to work for a wage, but we are on this planet to work, and that doesn't mean like work at a job 9 to 5 and stuff. You have a purpose, and there's a few exceptions, but most people, if they are just doing nothing and just coasting and surviving, like those folks tend to be over, other than like certain events and stuff, pretty miserable and unhappy versus like people like you can meet like a poor dude that's a roofer and has a family and everything. And he's loving it. He's loving life. It doesn't mean you need to do roofing, but if you're going to retire, like one of the worst things that I see for guys is there's 2 critical ages in life. One is if you're married a while and your wife dies. A lot of our purpose can be about our wife and our family. Our wife dies and it's tragic. It's hard. Be sure you build up, friends, support groups, and that sort of thing. Because it's not good to be alone, especially after that long a time. If you're single like Tevis your entire life, you're fine though. But the other, like in a really big one, a lot of guys will, especially older generation, will work for most of their life, retire at like 65, 67, 58, whatever. And then immediately, just as far as their health, if they don't have some sort of purpose, like grandkids, or they always wanted to travel the world with their wife, or they wanted to start a business of their own, or they just want to play around the garden or fish all day, like that's fine, that's great. They don't have anything at all, dude, like retirement is one of the most fatal things you can do. Like people's health drops off a cliff.
Yeah, maybe I could share this story. Roy knows this, but you guys, I haven't shared it publicly, but there was a period of time recently, and you'll notice if you look at the frequency of content that I was making, where I basically was kind of burned out from my other role, and I was just working way too much, and so I took a break. And I just traveled a whole bunch. I went to Japan, I went to Korea, I went to Europe and so I was like just traveling for 4 months or so before I just took my next role. And I treated it as like soft retirement. Like I had money saved up, I was fine financially, and I sort of wanted to just optimize my mental health. And I thought I was going to do that for at least a year. And I got bored as hell after 4 months, partially because I really enjoy what I do, but also partially because like what you don't think about, like everybody wants early retirement, but the thing you don't think about is like everybody around you, all your friends, your family, everybody, like they're not retired. And so it's just a random, Wednesday morning and you're doing your own thing. You're traveling, you're living your best life, doing nothing. And there's peace of mind there, but everybody around you has like their own little rat race, their own life going on. And so I think there is something definitely to be said about finding purpose in your work. And if you don't have that, pursuing that actively and optimizing for that, I think is much more impactful than optimizing for retirement, if that makes sense. And that's just from firsthand experience, because there was a good chunk of my early career where I just made all the decisions that would lead to more money. And then I had to backtrack some years later where I said, okay, well, actually, I'm going down the wrong path from a career perspective. So take it as
up. You're working, man. That's it. That's all this guy does is work. I hit this guy up like, man, you got to go to the gym. Got to take care of your health. Health is wealth, man. Go to the gym. Oh, man, I'm so tired from work, dude. And I put this parlay on last night and it didn't hit and it was so close.
I'm not. I say something inspirational and impactful for these people, and then we just totally discount it. Anyways, let's move on with the questions. How low do you think SoFi is going if this China thing don't work out and we hit a recession?
Probably sevens.
Yeah. Elijah, thoughts?
Yeah, I guess. I mean, I don't see it going below 9, but I mean, I guess it did a few days ago in Sunday overnight. So
yeah,
surprised me.
Your recession is a wild card. It's not been through a real recession. And by recession, I think we're talking about not the 2 consecutive quarters of negative GDP growth, but also people actually losing their jobs, getting laid off, very weak labor market. That's not good for any stock or anybody.
Yeah. I'm the only Canadian here, and I have no particular feelings about Shopify. It's a great company. I have a lot of friends that work there. I know Tanner is a big investor, so you're asking the wrong Canadian tune, unfortunately. Can you guys get Steve on tomorrow? Yeah, I'll ask him. If the China deal gets done, do we explode? I think so. And let me actually take it one step further. I think maybe Roy will disagree on this, but I think that we will not explode unless a China deal gets done. And you can make deals with EU, you can make deals with Japan, you can make deals with everybody else, but there will always be a dark cloud of uncertainty unless or until you make a deal with China. Why? Because they are a massive freaking economy, and they are sort of the other puzzle piece of having a harmonious trade balance with the world. You can't just shut them out. Everything is freaking made in China, dude. Like you need to have some type of agreement with China.
Mostly agree, actually. I think that the thing is China, if Ackman's scenario ends up true, which I think it's a low probability, but let's say if most of it ends up, so Mexico, Canada, Vietnam, Indonesia, Thailand, India, and so forth, all are kind of in alignment with this. China can't be isolated like that. It could lead to some bad directions, like the invasion of Taiwan. Hopefully it doesn't, or is a horrible thing. But if it doesn't, I think that enough certainty are there from those agreements that it's going to put enough pressure on China that they will end up making a deal of some sort that's going to stick and be around for at least through the Trump administration. So that said, if a China gets done, or we get a bunch of the major players, deals get done, China looks pretty isolated. It doesn't look like they're going to invade Taiwan. I think either of those scenarios are enough certainty for us to, over time, maybe not overnight, but over time, reclaim the all-time high.
Yeah, I think a deal with China is inevitable. It's going to come sooner or later, but right now I think it's just a battle of the egos. 100% on China and 200% on the US and then 300% on China. It's just, how long are we going to go, guys? Come on.
Yeah, I don't think you can go shot for shot for too long with economies of that size without, having massive ripple effects. And I don't think either economy wants to call the other's bluff, honestly. Because at some point, I understand this whole art of the deal BS that people throw around, but at some point, a part of my brain just goes to say this is ego at play, right? and it's just you don't want to back down because it bruises your own ego, and you're willing to put at stake the health of the global economy just to think of yourself as like a better negotiator than you are because it's been reinforced over decades.
Yep. That's the word of the day, ego.
Yeah. All right, here's a fun one from June. Which one of our hosts would make a better clean coal miner, and who would do better screwing tiny screws into iPhones?
I would die in either scenario. So,
yeah.
Clean, beautiful coal.
Are you guys ready for the sweatshops? Because that's what's happening. You're making your own shoes from now on.
Yeah,
it'd be $1,000 a pair and fall apart in like 2 months. Made out of rubber tires. Like, all right.
All right. I don't know the answer to this question, John. It's a great question. What percentage of HIM's raw materials are sourced in the U.S. versus imported? I don't know if any of us know the answer to that, but if you do, speak up.
Yeah, no, we don't know that. That's a good question, and I hope that Andrew ends up talking about that in the earnings call, like the impact of tariffs, potential tariffs on pharmas.
Yeah, I agree.
John also asked thoughts on Palantir if we head into recession. Shouldn't it benefit as companies and government agencies work to become more efficient? I also saw this post around like Palantir having models plotted out like ontologies for how companies can navigate tariffs, so that they're using it as like a marketing tool as well.
Yeah. So as far as a stock, that's what John asked. Stock would not do well. As far as a company, the company is ridiculously well positioned. 3 factors. One is what you mentioned as far as like this chaos with supply chains. They managed that already during COVID. Their technology is even better now. Like we saw just absolutely ridiculous outcomes during COVID by companies like Tyson that were using Palantir technology. And so we're going to see, certainly I think a lot of interest in that just because it helps companies be a lot more agile. I think as far as like Doge and that sort of thing, I think Palantir is probably already involved. They'll benefit from that. Even if the Pentagon does cut 8%, I don't think they're going to cut Palantir because it's actually software that works. And then the last factor is they came out with a offer, not a full platform, but it's built on top of one of their platforms called Warp Speed. And basically what this was like 6 or 8 months ago, before we even knew who was going to be elected. That's how forward-looking that Palantir tends to be. Is they're like, okay, we are launching a product that will help reindustrialize the American manufacturing base. And also, if you have like a Japanese factory overseas and you want to do a factory in the United States, this will help you do that, accelerate that, figure out all those logistics, and do it just like you would in Japan. They had a whole bunch of material and insights that came out, and I was like, I don't know how much interest there will be in this, but I guess it's cool. And now I'm like, okay, this actually looks like the exact product that they would have built if they knew this situation to a T. And my guess is they have an actual Palantir that's letting them see into the future. And it just feels like that. So yeah, the company will be very well positioned. The stock will probably go down, and enough that it may offer an entry for people that are looking to get in, but don't want to get in at this current price.
Yeah, I don't know enough about Palantir to make a comment, but yeah, what Roy said, it's financial advice.
Thanks.
Well, then let's flip it over to you, Elijah. Do you think HIMS will have a good quarter?
Yes, absolutely.
Why?
Dude, HIMS always beats, man. And they have a subscription model. We got members growing. And I like one of your older videos you mentioned about how small of a company HIMS still is. And they have testosterone, menopause treatment coming in 2025. I don't know where that image is. I wish I could bring it up, of all the new products they have planned. So, dude, HIMS, I don't want to call it recession-proof. I wouldn't call it recession-proof, but I expect HIMS to hold up extremely, extremely well. I mean, yeah, the stock has been punished exaggerated in my opinion. But the financials, the company, they're going in the right direction. So I sleep like a baby at night.
Yeah, I don't have any problem holding HIMS. I am very bullish on them from a fundamental perspective in terms of their growth rate, their cash, and their debt position being non-existent. I also think that this quarter is going to be especially relevant because the semaglutide is still like the shortage has not started, or the pause, they can still compound until May 22nd, I think is the date. And so that's going to be the bulk of their GLP-1 revenue that they're guiding for. I think it was like 700 something million for the year that they're guiding for GLP-1s. So we're going to see how close they get to that. And if they beat that number, then that's going to be good. Because, I mean, liraglutide is not really going to make that much for them. I also saw this thing. I'm trying to bring it up, but I saw this thing where they were partnering with Novo, I think it was, around continuing their semaglutide.
Not a partnership. I did a post and I did a video, and then I'm like, oh man, they're right. It wasn't a partnership. It was with Eli Lilly, unless I missed something more recently.
It was not a partnership.
Yeah, not a partnership. The Eli Lilly actually came out with a press release later that day or early the next day, and they basically said, yeah, anybody can do this. This is not a partnership.
Got it.
AKA, we hate HIMS, go away. Like that's what it felt like. Yeah, I think this is what you're talking about, Eli.
Yep, that was it. Yeah.
So this is just showing like the TAM basically in the U.S. population. Testosterone, menopause coming soon. A bunch of others in the works as well. Mental health, weight loss products. Yeah.
I want to hear about, like you said, I want to hear how tariffs are going to impact the business, impact on margin, and then I want to know their guidance. And I also want to hear about the GLP-1 side of the business. And I know it's phasing out. I also want to hear more clarity on if they're going to, focus on that. Well, if it's a personalized treatment for a medical condition, we can still do it or not. I think it's kind of a gray area. I'm mixed on it, but we're going to see. I'll be paying very close attention.
Yeah. All right. That concludes the questions for today. Sure, we'll ask this and then we'll wrap. Do you think with the tariff environment, SoFi will give guidance?
I think Noto's guidance is conservative enough. What may happen, and I think is not unlikely, is that they just hold firm to that guidance and they don't race.
Yeah, I can see that as well.
Okay. Shall we wrap there, boys? We've gone on for 2 hours, Roy. It's not quite the 4 hours you wanted, but close enough.
Yeah, I'm wiped. So, yes.
Thanks, everybody, for watching. Catch myself and Tanner tomorrow, where we talk about SoFi and some other finance-related companies. Catch Roy on Monday, where he will talk about Robinhood Weekly. I don't know if we're doing another one of these on Monday.
Hopefully.
Hopefully, we're going to do another one of these on Monday. So make sure that in just a few days, you join back for Bootleg Weekly. Thank you so much, and I'll see you then.
Elijah, where could they find you?